Good morning, everyone. You're all very welcome to our midweek market update here at the Alpha Capital Group. So obviously just recapping on the price action over the last couple of days. Of course, quick look at the price action into the busier day of the week today. Obviously with Thanksgiving in the US tomorrow, a lot of the news or a lot of the data has been shifted forward today. And reconciling obviously the volatility in the opening parts of this week. Now, overnight, from an initial offset, of course, we did have the Rbnz interest rate decision, of course, which did increase rates by, again, a further 75 basis points. So just taking a very, very quick deep dive into the, I suppose, into the markets, we can see that we did obviously get the 75 basis point increase in the New Zealand interest rate decision last night. Now, of course, what does that mean for the markets? Well, it generally means that the risk orientation is very much still continuing to the upside. We've seen that little bit of bid. Again, not much in terms of volatility overnight because 75 basis points by the Rbnz was the expectation. So really anything above 75 or anything below 75 was really what the markets wouldn't have priced in, and they would have had to make those adjustments in the price action accordingly. So we're obviously seeing the Kiwi from initial offset come back into the 62 level again. Against the dollar, so NZD USD, and we are holding firmly at this, I suppose, daily order block here and this liquidity region here between 61.80 and, as I said, 62.20. So, of course, worth keeping an eye on the price action because we talked about it on Sunday and Monday. The idea that, right, if the markets remain consolidated this week, which was the likelier scenario, you probably see riskier assets continue to grind higher, continue to hold a lot of their bid from, let's say, the price action over the last couple of weeks. And round out the, I suppose, the elements of price action into Thanksgiving as high as possible. And of course, true to that mandate, we are seeing a lot of these assets get as high as possible. So euro dollar is still holding up relatively well. Cable is still holding up relatively well in the FX markets. Even the likes of Kiwi, as we're seeing here, is holding up relatively well. And of course, we have to relay that back to the volatility in, as I said, the stock markets as well, which we're going to look at in a moment or so. So New Zealand dollar very much on the front foot into this region of interest. Is that to say that we should be start aggressively selling? Well, of course, into a 4-day weekend in the US, you'd have to contemplate whether that is a wise move because of the volatility associated with thinner volumes. So generally speaking, when you have periods of the price of the markets when there is thinner volume, it doesn't take as much volume in order to move those markets to a specific level. So that's when you tend to get a bit of wick and chop and volatility from a pricing perspective. So it might be just be aware of that for traders in I suppose the greater sense of things. Now, of course, if you wish to take trades, absolutely you're free to do so. It is completely your decision. But from our perspective, it is just to give traders as much information as possible so that the decision process is as informed as possible also. So obviously looking at the DXY from where we were on Sunday and Monday, this is actually playing out pretty much as we expected, right? We had that consolidation, we had that upside break of volatility in terms of upside direction on Sunday night into the market open this week. We talked about it on Monday, we had that move higher. We're seeing that dollar correction all the way back into this 4-hour level here at 107, of which there was a little bit of a bounce this morning. So price action has bounced off of this 106.85 level this morning, but worth seeing, can the price action get back into this 4-hour liquidity area at 106.70. Now, of course, again, with the consolidation last week, we did see the stock markets rally. And of course, with the pullback again this week, particularly yesterday into this morning, we are seeing the stock markets continue to hold their bid. So, of course, from an FX perspective, euro dollar has got back into this region. Cable has also continued to consolidate up around this region here. So cable is a little bit more of, I suppose, consolidation structure. We haven't seen really a complete break. We had a short-term internal break, then we had the price action coming back up into this 1950 level. Since then, the markets has just drifted sideways, and that's because of the pullback in the DXY accordingly. So euro dollar has definitely been the cleaner pair of the two because we had that consolidation, we had the break of structure. Price action did get back into this yellow area, which is the discount zone. So 707 to 786. And of course, we have reacted very, very cleanly off of this level as well. So we haven't quite mitigated the order block, but we have come very, very close to that region. So then really you're kind of looking at the price action then focally. Focal point is dollar CAD. We'll talk about CAD in a second, but we had that influx of price action yesterday. or I suppose over the last few days to the upside. We had a little bit of a tail off yesterday as the oil prices came back a little bit. So we'll show you the oil chart now in a second. And we are kind of pulling back into those order blocks as well. So it'll be interesting to see if there's any sort of reaction. Of course, 133.75. Now, if I was looking at dollar CAD, really this area here, if there's going to be a change of trend and a change in dollar sentiment, really you should be looking at dollar CAD around this 133.20 level to potentially maybe down here 132.50. But of course, worth keeping an eye on the price action there as well. Dollar yen is next on the list, and it's very much repeating what we're seeing on the DXY, albeit maybe not as deeper as the pullback. So we've had that consolidation, we've had the liquidity upside impulse, price actions flagging back down. So of course we're looking to see if there's any sort of reaction from that zone. Now, structurally speaking, we did get to just underneath the 141 level. We have been looking for a little bit of a deeper retrace back into this area down here before we started to see that assimilation to the upside. So of course that's the one that's kind of worked watching. Of course, the Kiwi we talked about, and we're still seeing that move to the upside. So of course, for the Kiwi to reject this level and roll over, we're really looking for that DXY to come back in, clean out the last of the liquidity, and then start on its merry way to the upside. So I suppose that's just obviously something to be aware of. It could happen over Thanksgiving and Friday, but of course worth keeping an eye on the price action, let's say, over the next couple of days. Gold next on the list, very quickly, has been again a bit in the middle of no man's land, really. We didn't quite mitigate the daily level. We did come quite close to it. We have obviously faded underneath the 1790 level at 1785.86, and we had sold off into the early parts of this week. In the last couple of days or so, the market has been fairly choppy, fairly consolidated, has been bottoming out kind of here, short-term bottom around 1735, and of course that'll be worth interesting to see, because if that dollar sentiment does shift, then you could actually see this conceivably break lower. So from that perspective, all eyes is really on the price action to determine clarity in terms of focus, and of course looking at the dollar sentiment as well. So you're really looking at gold v dollar sentiment here. Now, of course, it's not the cleanest one out of all of them. Of course, I do prefer the likes of cable and euro dollar as positional entries from an analytical perspective, but obviously gold is obviously worth looking at nonetheless. Now, moving across the oil has been very tricky the last couple of days, because of course higher time frames, you would see this very sharp decline to the daily lows here from the 26th of September. If we go to a 4-hour chart, you can also see that very sharp wick rejection. And of course, if we go down to the 1 hour, you will see the manipulation. Okay, so you will see the consolidation, you will see that V-shaped rally, so that massive sell-off, test the lows, very clear snap back to what the S&P done actually the October of the CPI, and we'll compare that now in a second. Then of course what happens, the price action grinds higher and is now starting to trend to the upside. So now it becomes a case of really, well, we've got the consolidation, we've got the manipulation, we've got the very sharp U-turn, we've got the taking of the consolidation range with this upside spike. The price action has pulled back. Now, personally speaking, I was looking for price action to come back to this 79.80 level into this area. However, the pullback didn't extend to that. It went to about 80.85, and now we're trying to extend higher. So if we're taking out this, that's really a telltale sign that the price action is looking to take this higher. Okay, but of course, let's wait and see, because on the 4 hour, we're still kind of holding a short-term high here around 82. So you'd really want to see 82 being comprehensively broken to articulate a viewpoint that the price action is going to continue moving higher, 84, 86, 88, and back up into this 90 level. But at this moment in time, the initial short-term impulse and the manipulation was a very easy spot on that one as well. Now, if you look at the stock markets, broadly speaking, with that dollar consolidation, as we said, and dollar pullback for the relief rally of the liquidity move, the S&Ps, the Nasdaq, the Dow Jones have all continued to turn higher. So if you're looking at structurally speaking, we've got this daily level here on the S&Ps. We're still technically grinding higher, still a bullish order flow, which is a positive thing. Do I expect these stock markets to continue stronger into the Thanksgiving holidays? I would suspect so. I really don't think that you're going to see that much in terms of today, although we do have quite a bit of data today, which we'll look at now in a couple of moments. The S&Ps are still holding relatively strong, so it's worth keeping an eye on that today to see if there's any sort of reaction into Thanksgiving. But overall, you can see that the market has held up relatively well. Nasdaq has been quite a similar move. So obviously, when we broke that structure area here, we flagged up to 12,000. We have come back down into this 11.5 level, which you can see here has held pretty perfectly. Okay, you can see here 11.5 has been holding, and we have been now trying to create this push on to the upside. Now, of course, if you look at it, 12,000, We do have lower highs here at 11.8, and now the price action is creating structural lower highs here at 11.7. So we need to be kind of careful that if you were going long in indices into the bank holidays, which I obviously don't recommend, obviously just make sure you have clear structure. You want to be taking out some of these lows from a price action perspective to articulate that movement to the upside as well. But structurally speaking, 11.5 has been holding up relatively well on the Nasdaq. Now, higher time frame, first of all, you can see that the Dow Jones has completely undone all of this selling bias that we saw from August and September. Daily liquidity area, sell off into this bottom structure. You can see that double bottom playing out nicely. Of course, price action then trends higher. So we're getting that flagging structure. Price action consolidated over last week. And yesterday, the price action is broken out through this daily order block level here at just underneath 33,900 and is now trading in this range between 33,875 and 34. Just under 34,300, which is the liquidity high from August. So, of course, then when you look at the 4-hour structure, you can see the consolidation. You can see very, very clearly how the markets has been moving very, very sideways. We did get one last kind of impulse back into the highs, and then all of a sudden, then we're breaking out. But you can kind of see through the Asia session now, markets has been very, very flat at the minute, suggesting, is this maybe a hunt of liquidity? Is this a stop hunt? Well, of course, we do have data out in the US at 1:30. We do have a flood of data out in Europe tonight, this morning, between 8 o'clock, the London Open, and of course, 9:30, 9:45 in the UK as well, so 9:45. So you can see how the indices are still holding up relatively well, as I said, into the data today. That then obviously turns out to be the FTSE as well. Look at this move in the FTSE. Daily 4-hour levels here at 7,500. That really was the interesting area to see how does the markets react here, because the markets are still churning higher. We had the daily order flow here at kind of 7,400. Obviously yesterday with that risk aversion or risk orientation, should I say, the FTSE has continued to trend higher. Okay, and you will see a very, very similar thing about the DAX and the Euro Stoxx. The DAX is now broken through this 4-hour and daily zone here between 39.25 and 39.35 that we talked about. We've actually broken up and we're pulling back to retest. So you can see here on the daily, if I zoom in on Euro Stoxx, that kind of grind higher. We've now broken through. We're pulling back to retest. So interesting to see how does the price action develop in this region today. Is that a short-term pop for the price action ultimately to wind lower? Well, that of course will be the time to decide. But if you're even looking at the short-term perspective, you've got the consolidation, you've got the grind higher, makes the highs, is now pulling back to this level here. So that's really going to be the catalyst today to how we end out the week. In terms of stock performance, really is the reaction here at the Euro Stoxx, particularly around this region as well. And that of course brings us to the DAX, which again, similar to the Euro Stoxx, has been grinding back into this June level from around about 14,500. Now we obviously, of course, we have come to 14,488 on this chart here, but of course there is a little bit higher that this price action could potentially go. So if you're looking at price action from a daily or a 4-hour perspective, you go back to the June highs, you can see that there has an area up here, as I said, around 14,550 to 14,600. So really that's kind of the area of interest that I would be looking at from a perspective of potential selling if there was one, because we can see that the price action is creating this grind higher, this flagging structure, this bullish order flow. So really just a matter of how the price action develops around this region as well. And as I said there, similar with the FTSE, similar scenario, we've taken out the daily order block here at 74.10. We've mitigated 4-hour at 74.65. Markets is still trending higher. Okay, has created that bullish impulse, is now pushing towards these wick highs from the August impulse. So obviously August was in this consolidation. So you're looking really at this 75 level here today to see how does the markets react around this region of interest here. So that then brings us to the economic calendar. Just very, very quickly taking just a very, very quick deep dive. PMIs this morning in Europe, we had Germany, we had the Eurozone. Let me just filter down very, very quickly. And of course, we did have France as well. France has been a bit mixed. Germany has outperformed. The S&Ps in the Eurozone has also outperformed, albeit all still well below 50. So 50 is the break-even point, I suppose, for PMIs. Anything below 50 is recessionary, is contractionary. Whereas anything above 50 is obviously growth and is positive. So we do have PMIs in the UK shortly. So again, obviously looking to see how does that fare out, because of course higher PMIs could be technically a good thing for the FTSE as well. And of course, then today we have a raft of US data. We've initial jobless claims with PMIs in the US. We've got the Michigan consumer sentiment. We've got new home sales. And of course, we do have the durable goods order. So there's a lot of data coming out today between 1:30 And as I said, kind of that 3 o'clock, so that hour and a half either side of the US Open is going to be kind of volatile today, given that the markets are closed tomorrow, given that we have very little on Friday as well in terms of vol. Now, this evening we do have speakers. We have Pill speaking, the Bank of England's economic advisor speaking as well. We've got Bank of Canada's Governor Macklem speaking tonight with Rogers as well. And of course, we do have the FOMC minutes at 7 o'clock tonight. And then, of course, tomorrow, again, obviously a lot lighter on the data point. Germany, Friday morning with the GDP figures in Germany. So that would be one to watch in kind of into the weekend, particularly from a DAX and Euro Stoxx perspective, but also a Euro perspective as well. And then tomorrow we're lighter on the data as well. We've no US data tomorrow, so it'll be just kind of what we have in Asia and Europe with Germany, IFOs, Ramsden and Pill speaking from the Bank of England. We've got Schnabel and the Gundas from the ECB. We've got Alton Mann speaking in the afternoon. And then, of course, we have a few bits and pieces out in Asia as well, with Aussie and Kiwi retail sales data and consumer confidence, with Japanese or yen CPI figures coming out as well. So not really too much over the next couple of days, but today is really going to be the big day for the markets. And of course, a lot of the bigger institutions will be looking to square off the books and to be as flat as possible into, as I said, 4-day weekend, because we have Thursday, we have Friday, then we're obviously closed for the weekend. And then you're really coming back next Monday into what will probably be a busier month end as well. All right. So that's pretty much it from a market perspective, everyone. Of course, trade safe and take care.